that's what you learned as an evolution as a business owner. How do you set things up to mitigate risk? It's going to happen, but it's your job and your duty to learn how to mitigate the risk.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
But it seems that because on the tech space, a long time ago, people were even raising millions with just a piece of paper, have this tech idea, okay, and the VC were giving it a million. Um, so how you become investor? Where do you learn? What the story? So our audience, when they go to look for funding, they understand more who is an investor because they have this perception. The investor is someone that have access to a lot of money, and if I tell it story, they're gonna give me the money, and it doesn't really work like this, right?
Doesn't work at all. So, how to become an investor is your question. Education is very important, right? And I mean, education on the field that you want to be in, whether it's real estate, tech, business, whatever it is, right? Whatever you're going to get into, you have to immerse yourself in it. You have to become relentless and educating yourself. You have to become it, right? Once you understand that, then you have to build a track record. And now I'm on the side where if you're looking for someone to invest into you, meaning you, not the product, right? People, I don't know if I lost you. People invest in you, not the product, right? So if investors know, like, and trust you in that order, they got to know you, they got to like you, they got to trust you. Eventually, they will invest with you once you have a track record. Now, what do you do if you don't have a track record and you're raising money from potential investors for your idea, right? They have to see that you're educated in there, that you have not just projections, that you have a proven concept that this will work. Maybe someone else that you're replicating this idea off of, have the concept and numbers that it will work, right? So you're putting together the business plan and you're showing them how you're going to execute to protect their investment. And lastly, I would say skin in the game. That always helps investors make a decision because if you're invested into your own investment, there's an alignment. So, I kind of gave you looking at it from both ends. If I'm going to invest into something, and also if I want someone else to invest into me, right? Not my product, what it takes from my experience.
Yeah, often biggest challenge that we see, and it's kind of normal, especially in the, well, not in the tech industry, in the industries in general, is that first-time founders, they they are they're very in love with the product. They love the product. They are very focused on the product, and they put most of the time, money, and energy creating this product that is gonna change the world, right? Whether second time founder, they have a different approach. They rather than put all this time, money, and energy in create this product that's gonna change the world, they do something different. They design sales and marketing strategies, and they create what they call an MVP, a minimum viable product, and they design a marketing strategy and in sales to present it, and this market is gonna tell them, gonna give them size, how they want a product and how much they're willing to pay, and after that they have that information, um, they design the product. So 80% of the time, money, and energy, it goes to sales and marketing. Whether we have even a generation now, third-time founders, that they create the market first. They after they design sales and marketing strategy, and finally they create the product. So, uh, how a founder, or why do you think that all of us, when we started the first business, and everybody out there, when they started the first business, 80% of the people that are doing it the other way around, they started for product first, and after when they cannot sell it, the company failed. So now the second company, they know that it's not a product, that is sales and marketing. Now they go sales and marketing, but they struggle to beat the market. This company fails again, and now the third one, they finally got it. Oh, let me create the market first, then sales and marketing strategy, and finally a product that I can plug in. So it's easy to raise funds. It's easy to have a track record. Exactly what you're looking, track record, proof of traction, right? If they
Right.
reverse engineering, they're gonna have an easy process. So why do you think that everyone is doing in the other way around?
Because it
Definitely, it's
pretty
not
much.
definitely they're not listening to the investor. Definitely, they're not listening to you guys, because if they listen to you guys, that's exactly the kind of flow that you need to see in order to release some money. But everybody's doing all the way around. Everybody have the pro, and then they want to they cannot market, and they want to sell it. Then they come to you to give them funding for sales and marketing. This doesn't really work, because you're gonna say, guys, you don't know how to sell it. You're gonna use my money to go out and sell it. You crazy?
Well, that comes back to education, right? The person don't understand the process in which it works. So be when you want to, everybody has this shiny squirrel, we call it syndrome, where they chasing a bunch of squirrels, right? They see something, they think that's going to make a lot of money, they get involved with it, and then they don't do enough research or education. They don't have any skin in the game, invest in their own money, so there are no pain points that forces them to learn faster to kind of rebuild
Mm-hmm.
the where it works. So I think that's what it is, right? It's just they're gamblers,
Mm.
basically. They're not investors, they're gamblers, they're speculators.
Exactly. So, Funquan, tell us what industry is your favorite, or you are agnostic, or what industry is your favorite? And this question go to where with something else. How you deal with the amount of project that you guys receive? Because we work or we are in contact with a lot of investors, and we always get the same feedback for everyone. I said, Harry, I'm flooded with projects. The problem is that it's difficult to find one that is actually good.
Yes,
Um,
real estate is the market that I've been in for the last 26 years. And, I like tangible assets. I like alternative assets, primarily real estate, whether it's rental properties or one of our verticals in our investment fund is luxury spec homes, where we'll buy
wow.
homes, tear them down, rebuild new construction luxury homes. Will sell for $1 million to $2.5 million. And we also have a portfolio of rentals, multifamily housing, where we provide affordable quality housing for low income people.
Oh,
So
wow.
those are the two verticals that are in our investment fund, and it's a diversified strategy that we focus on. So kind of use my 26-year experience, the investors that that have been investing along on the side with me for the last 26 years, kind of understand, the market, whether it's the macro, micro, what's happening, in real estate. And there's risk that's involved with any investment that you're
Absolutely.
into. It's about the education. So those are the investments that we're in. And, it always comes back to the four parts of the business, regardless if you're in real estate, tech, or whatever, which is people, strategy, execution, and cash. If you have KPIs around that and you have quarterly goals that are tracked and measured to get to see how well you're performing in those areas, you will have success, which is an optimized daily experience over time.
Okay.
So
What? Yeah. So it's easy become a millionaire by becoming a property investor. One out of five entrepreneurs that we interviewed this podcast on a stop of 5 step how to make your first million, they are property investors. So our audience might think or might have an indicator that wow, if one we already interviewed with 500 millionaires in this broadcast, and one out of five the rate they are property investors. They're doing something with property. They either doing developing, multifamily business, big deal, small business, refurbish. So, Punquan, is it easy become a millionaire in property, or it doesn't sound like it is, or My first business was in property. We were doing rent to rent in London. We managed to sell over 5 million doing this. So I'm on the space and I understand a little bit, but when something goes wrong in property, you lose a lot of money. Yeah. So no, we think so. Give us the pros and cons, because the fact is, and it's proven by this broadcast, property is one of the best vehicles in the world to become a multimillionaire. Is proven in this very same podcast, right? That more people come. So, but tell us the pros and cons. Is it really that easy? Do you there are challenges on the way that people are not aware, or what do you recommend to the young generations that want to thrive, that want to grow, that want to start to learn a little bit more, so they can maybe co-invest with you guys the project that you have, or understand a little bit more? Do you think finding a mentor would be a good idea? So tell us, what are the pros and cons, and is that easy become a property multimillionaire?
Nothing is easy. Nothing is easy. For people who want to be like comfortable, then it's easy, right? So comfort doesn't bring growth, right? Easy doesn't bring growth. If it was easy, like they say, everybody would be doing it. So you have
Mhm.
what you call in this space an active investor and you have a passive investor.
Mhm.
It's much easier for a passive investor who educate themselves on that part of the market or that
So
asset
yeah,
class.
they understand the risk and they understand what they're getting involved.
So they're not actively involved, they're passively involved. So it's
But at
much
least they understand what's going on.
exactly from an investment standpoint, they're educated, they're knowledgeable, they know the risk. So it's much easier for them. For an active investor, is not easy because they're out in the field on the front line doing the work,
Hmm.
getting
And
the
they're
risk.
putting the money on the skin first, right?
Correct. Skin in the
So
game, mitigating the risk,
you're
pushing the
putting
line.
your
So
uh,
it's more active for that person, which is not easy. Really nothing is easy. You're gonna get, if you are a serious investor, you're gonna have losses. You're gonna have those experiences. You're gonna like
how you
understand.
overcome that challenge.
Yeah, you're gonna
Fuquan, because it
that
happened to
challenge.
me. Yeah, I started to do property, and wow, the first one works amazing. The second one was a wow, a lot of money. This is amazing. Wow, one bad deal came. I did make a mistake, and I got hit big time. Yeah. So when you make a mistake, you learning from that mistake, but it's not like a mistake. Maybe in another industry, well, you can lose a little bit of money and that's it. You learn. But when property something goes wrong, wow. Sometimes we talk about large amount of money. So how you overcome challenges when this situation happens? That it happened to everybody. If anybody property investor come to this podcast and listen, my portfolio is straight. I never have any setback, and everything
Never,
was.
never. My
That's
26 years,
that. It doesn't really work like that. Yeah.
doesn't really work like that. In my 26 years, even myself, I went through the
Look
GF
at you. You have a lot of experience. Wow.
global financial crisis in 2008.
Absolutely.
Lost money there. When COVID
Mm-hmm.
came, lost money there. So
Mm-hmm.
a lot of challenges you go through as
Mm-hmm.
an investor or just as an everyday business operator, right?
Mm-hmm.
So, but you learn and you start looking at things that will set you up for risk adjusted yields. You have to add a little bit more holding time, holding costs to kind of mitigate those risks, a few things to mitigate the risk. So that's what you learn as an evolution as a business owner. How do you set things up to mitigate risk? It's going to happen, but it's your job and your duty to learn how to mitigate the risk.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.